So as I've been saying yesterday that the range bound trade could lead to something big. Now whether it will happen on the upside or the downside, that may be a question, but the range in the Wall Street for all the indices are getting narrower and narrower, and we have seen a big down move yesterday, and obviously this is not at all a good indication. Maybe there will be an upside, but because we are analyzing the market as well as the indices on a daily basis, so obviously we need to look at the things which has happened yesterday and its impact on today's trading session. So let us see what lies ahead for Dow Jones, S&P 500 and Nasdaq in today's session, or probably the last day of the first week of calendar year 2023. So let's start with Dow Jones, and as you can see, you may still face a range bound trend. Okay, you may still face a range bound trend instead of this 300% or 330% plus down move. Okay, so if you are looking at the price action, you can see something like this. So here we are, and this is the range in between which Dow Jones has been trading. So basically this is the range, and if you are looking at the overall range, uh, right now right now the range is intact, but it is very important to understand. First let me explain you the levels again. So now you have your immediate support of 32,863, below which we have 32,646 and 32,584, and simultaneously on the upside we have 33,390 and 33,435. So this is the basic range. Now the support level is at risk, and if it falls below, if Dow Jones falls below 32,863, we then have 32,646 and 32,584. Now what I'm saying over here is, this is although this price pattern is moving in between a range, but this is not at all good, because if I may extend this range, you can see a big downside and then a consolidation. So basically when a downside happens like this, and there is no follow through on the upside and the price pattern becomes flat, and if the market behaves like this, then the next move will probably be on the downside. So you may save your levels, or you may keep a very strict stop loss if you think that if you want to go long, and simultaneously keep your resistance at 33,435 if you want to go short. So don't keep your stop loss at 33,435 on the upside simultaneously. Talking about the Nasdaq, because it's the most fragile one, and obviously you will see the impact. The impact has already been started of all these rate hikes, and some more is yet to be seen. So if you are looking at the price action, so Nasdaq is giving you some very chilling information, because the range is even narrower, as you can see, and we know how fragile the trend of Nasdaq is. So the range is very narrower, and this is not at all giving a good indication. So on the upside you have your resistance at 10,525.30, probably your immediate support of 10,003 at 18, and your big support or stop loss at 10,200. If it falls below 10,200, we then have a downside which will resume again, and we have seen a big slide and then again a flat trend. So this is not at all a good indication, because Nasdaq, if falls below 10,200, will again see a down move. So this is the pattern is very clear to each and every, or for each and every indices. It's just somewhere the range is narrow, somewhere the range is broad. That's the only differential. But if you are looking at the overall trend, and if you include the current range, that's fine, but looking at the overall trend and then looking at the range, it looks like a negative price pattern. Okay, so be very very careful and be very very alert about the trend or the price action. So the question is, what lies ahead? So here we are, and so this is the range for S&P 500, obviously the most stable one. So you have 3796 and 3783, which will be your support and stop loss, and on the upside we have 3865 and 3873. So basically this is the range for S&P 500, and you may also add one more level as far as your big support is concerned. So you may, here we are, you may also want 3765 as far as the lower end of the range is concerned. Okay, so these are the levels that we are going to look at moving forward, and the trend is similar. If you are looking at the overall trend, then these are negative price pattern, although the movement is happening in between a range. That's because there is no big price action as of now, but let this week settles down. We are trading at the last day of this first trading week for calendar year 2023, and once things settle down, then you will see if the upper end of the range or if the resistance does not breaks, then obviously you will see big price action, but on the negative side. That's a probability I'm talking about. That's why if you want to go long, keep your stop loss very tight. If you want to go short, keep your resistance very sharp and don't try to do a follow through beyond the resistance zone. So this is the end of the video. Thanks for watching.